Global Monetary Watch welcomes you, and today is July 27th. Thank you for joining us for another detailed review of the latest developments surrounding the Iraqi dinar and Iraq's financial landscape. Every day, new reports, opinions, and speculations circulate across the internet, making it increasingly difficult to separate verified information from unconfirmed claims. In this update, we will focus entirely on official developments, broader economic trends, and measurable policy actions that are shaping Iraq's financial environment. Rather than relying on rumors or exaggerated headlines, our goal is to examine the facts, explain why they matter, and place today's news into a wider economic context so viewers can better understand the ongoing evolution of Iraq's banking and monetary system. The latest developments begin with important activity surrounding the Central Bank of Iraq, which continues to emphasize stability as the foundation of its monetary policy. Recent official statements indicate that the bank remains committed to maintaining its current policy framework while advancing long-term reforms designed to strengthen Iraq's financial institutions. Instead of introducing abrupt changes, policymakers are focusing on improving banking efficiency, increasing regulatory oversight, and reinforcing confidence in the country's financial system. This steady approach reflects an effort to build durable institutions capable of supporting economic growth over time, rather than responding to short-term market pressures with sudden policy shifts. One of the key themes emerging from recent updates is the distinction between Iraq's official exchange rate and activity within the parallel currency market. Although the central bank maintains its official benchmark, local market prices continue to fluctuate in different regions depending on cash demand, commercial transactions, and liquidity conditions. These temporary differences are influenced by several economic factors, including cross-border trade requirements and the availability of foreign currency. Analysts often monitor these fluctuations because they provide insight into how effectively official monetary policies are functioning and whether financial reforms are improving the overall balance between regulated banking channels and informal market activity. The central bank has also continued strengthening its regulatory oversight of financial transactions. Measures designed to improve transparency, enforce anti-money laundering standards, and ensure compliance with international banking practices remain central to its strategy. While these policies may temporarily affect the movement of foreign currency within local markets, officials view them as necessary steps toward creating a stronger and more reliable financial system. As regulatory standards become more consistent, authorities aim to reduce opportunities for illicit financial activity while encouraging greater confidence among domestic institutions and international financial partners that engage with Iraq's banking sector. Beyond monetary policy, Iraq's broader economic reform agenda continues to gain attention. Government agencies are working on several national projects intended to modernize infrastructure, improve customs administration, and expand digital payment systems across both public and private sectors. These initiatives represent part of a long-term strategy to diversify economic activity beyond the country's traditional dependence on oil revenues. By modernizing tax collection, encouraging electronic transactions, and strengthening domestic commerce, policymakers hope to improve efficiency throughout the economy while creating a more resilient financial structure capable of adapting to changing global economic conditions. Another important aspect of today's update involves Iraq's continued efforts to strengthen connections with the international financial community. Authorities have been working to ensure that commercial banks comply with globally recognized regulatory requirements, allowing qualified institutions to participate more effectively in international financial transactions. Compliance with anti-money laundering regulations and other international standards is considered essential for expanding correspondent banking relationships with foreign institutions. As more banks meet these requirements, Iraq's financial sector can gradually increase its integration with global markets, while supporting greater transparency and efficiency in cross-border financial operations. Energy markets also remain an important factor influencing Iraq's economic outlook. Because oil exports continue to provide a significant share of government revenue, fluctuations in global energy prices directly affect public finances and foreign exchange reserves. Periods of stronger oil prices typically contribute additional resources to the country's reserves, while lower prices require greater fiscal discipline and careful budget management. Officials continue monitoring these developments closely, recognizing that maintaining healthy reserve levels provides an important financial buffer that supports monetary stability and helps protect the broader economy during periods of international market uncertainty. Regional developments continue to play an important role in shaping Iraq's financial environment. Economic cooperation, diplomatic engagement, and commercial activity throughout the Middle East all influence investor confidence, trade flows, and cross-border financial transactions. When regional conditions remain stable, businesses generally find it easier to expand trade and investment opportunities. On the other hand, periods of geopolitical uncertainty often encourage market participants to act more cautiously. For Iraq, maintaining productive relationships with neighboring countries while supporting secure trade routes remains an important component of broader economic planning and contributes to the country's efforts to strengthen long-term financial resilience. Government budget policy is another critical area receiving close attention from economists and financial observers. Recent coordination between Iraq's Ministry of Finance and the central bank reflects an emphasis on maintaining consistency between fiscal planning and monetary policy. This level of coordination is significant because balanced policymaking helps reduce financial uncertainty while supporting sustainable public spending. Authorities continue implementing structured accounting practices, improving financial reporting standards, and strengthening oversight across government institutions. These efforts are designed to improve transparency, increase accountability, and reinforce confidence in Iraq's public financial management over the coming years. Looking back over the past decade highlights how much Iraq's financial strategy has evolved. Earlier periods were frequently characterized by emergency measures that responded to immediate economic pressures, including declining revenues, security challenges, and disruptions in public finances. Current reforms, however, appear to follow a more deliberate and structured approach. Rather than reacting to short-term developments alone, policymakers are introducing long-term institutional improvements intended to strengthen banking operations, modernize financial services, and improve regulatory consistency. This gradual transformation reflects a broader commitment to building stronger institutions capable of supporting future economic development. Digital modernization has become one of the most visible components of Iraq's economic reform program. Government agencies and financial institutions continue expanding electronic payment systems, digital banking services, and modern financial technologies across the country. These initiatives aim to reduce dependence on cash transactions while improving efficiency for businesses, consumers, and public institutions alike. As digital payment infrastructure expands, authorities expect greater financial inclusion, improved transaction tracking, and stronger compliance with regulatory standards. Although this transformation requires time and continued investment, it represents an important milestone in Iraq's ongoing modernization efforts. At the same time, officials continue paying close attention to liquidity management throughout the financial system. Maintaining an appropriate balance between domestic currency circulation and foreign currency availability remains an important responsibility of the central bank. Decisions affecting liquidity are carefully monitored because they influence banking activity, commercial transactions, and overall market confidence. Rather than pursuing rapid adjustments, policymakers continue favoring measured actions supported by economic data and regulatory analysis. This cautious strategy reflects an effort to preserve financial stability while allowing reforms to progress through established institutional processes. International financial standards also remain central to Iraq's long-term objectives. Continued compliance with globally recognized banking regulations helps strengthen relationships with foreign financial institutions and supports participation in international payment systems. Iraqi authorities have repeatedly emphasized the importance of improving governance, enhancing transparency, and ensuring that domestic banks operate according to internationally accepted practices. As compliance improves, the banking sector becomes better positioned to facilitate legitimate international business activities while contributing to greater confidence among global financial partners. Observers also continue monitoring the relationship between official monetary policy and developments in local markets. While short-term fluctuations may attract significant public attention, economists generally focus on broader indicators such as reserve management, institutional reforms, banking performance, fiscal discipline, and infrastructure development. These long-term factors often provide a more comprehensive picture of the country's financial progress than isolated market movements. Understanding this broader context helps explain why many analysts evaluate multiple economic indicators together, rather than relying on a single data point when assessing Iraq's evolving financial landscape. As Iraq continues implementing financial reforms, attention is increasingly turning toward the country's long-term institutional development rather than isolated daily events. Recent policy actions demonstrate that government agencies are working to improve coordination across multiple sectors, including banking, taxation, customs administration, and public finance. Each of these areas contributes to the overall strength of the economy, and officials have repeatedly indicated that sustainable progress depends on building efficient institutions rather than relying on short-term solutions. This gradual process requires consistent policy implementation, regulatory oversight, and cooperation among various government bodies responsible for managing Iraq's economic future. Foreign exchange reserves remain one of the strongest indicators closely monitored by economists and international financial organizations. Healthy reserve levels provide the central bank with additional flexibility to support monetary stability during periods of market volatility or external economic pressure. These reserves also help strengthen confidence in the country's financial system by providing resources that can be used to manage liquidity and meet international financial obligations when necessary. While reserve levels naturally fluctuate over time due to changes in oil revenues and government expenditures, maintaining adequate reserves continues to be viewed as an important element of responsible economic management. The banking sector itself is undergoing a steady transformation as institutions modernize their internal operations and adopt more advanced compliance procedures. Financial institutions are investing in updated technology, stronger risk management practices, and improved customer services while working to satisfy regulatory expectations established by Iraqi authorities. These developments are intended to create a banking environment that is more transparent, efficient, and compatible with international financial standards. As modernization efforts continue, banks are expected to play an increasingly important role in supporting commercial activity, facilitating investment, and expanding access to financial services throughout the country. Infrastructure development also remains closely connected to Iraq's broader economic objectives. Investments in transportation networks, logistics facilities, ports, and customs operations are designed to improve trade efficiency and strengthen domestic economic activity. Better infrastructure can reduce business costs, encourage private sector growth, and improve the movement of goods across the country. Combined with ongoing digital transformation initiatives, these projects contribute to a more diversified economic foundation that extends beyond traditional reliance on the energy sector. Policymakers continue emphasizing that balanced economic development requires improvements across multiple industries rather than concentrating growth within a single source of revenue. Despite measurable progress, several challenges remain part of Iraq's economic landscape. Bureaucratic procedures, regional geopolitical developments, market liquidity conditions, and the continuing gap between official and parallel exchange markets all require ongoing attention from policymakers. Addressing these issues is a gradual process that depends on consistent enforcement of regulations, continued institutional reforms, and cooperation between government agencies and financial institutions. While improvements have been observed in several areas, officials acknowledge that additional work remains necessary before reform objectives are fully achieved. Another important consideration is the role of public confidence in supporting financial stability. Economic reforms often produce the strongest results when businesses, financial institutions, and citizens have confidence in regulatory systems and government policies. Transparency, consistent communication, and predictable decision-making help reduce uncertainty while encouraging broader participation within the formal financial sector. As authorities continue implementing modernization initiatives, maintaining public trust remains an important objective alongside technical reforms involving banking operations, fiscal management, and economic governance. Looking at the broader picture, today's developments suggest that Iraq's financial strategy remains focused on gradual modernization supported by institutional discipline and regulatory compliance. Rather than indicating sudden policy shifts, recent announcements reflect continued efforts to strengthen banking supervision, improve international cooperation, expand digital financial services, and enhance the country's economic infrastructure. These initiatives form part of a long-term reform agenda aimed at creating a more resilient financial system capable of supporting sustainable economic development while adapting to changing regional and global conditions. As we conclude today's update, the overall message remains grounded in verified information rather than speculation. Iraq continues advancing reforms across its banking system, public finances, and economic infrastructure, while addressing ongoing challenges through measured policy actions. Monitoring official announcements, economic indicators, and institutional progress provides a clearer understanding of the country's evolving financial environment than relying on unverified claims or market rumors. We will continue following these developments closely and bringing you objective, fact-based analysis as new information becomes available. Thank you for watching Global Monetary Watch on this July 27th update. If you found today's analysis informative, remember to subscribe to the channel, leave a like, share this update with others interested in Iraqi economic developments, and press the notification bell so you never miss our future reports.